Hello, this is Arthur Hill with StockCharts.com. You are tuned into a video edition of the Mailbag, and today we're going to look at the difference between MACD and the Percentage Price Oscillator. And there is a difference, especially when you see a big price change in the underlying security, a stock or ETF. So before we get to the indicators, which are shown just below this chart, let's look at Tesla and see what happened to the price chart. Okay, you can see that Tesla moved from the mid 30s all the way to the low 90s. It's basically up $160 in less than 7 months. That was like a 450% advance. And you can see the red line is the 26-day EMA. The blue line is the 12-day EMA. So you can see here that MACD basically measures the difference between these two exponential moving averages. The percentage price oscillator takes that one step further and it divides it by the longer moving average, the 26-day EMA, to show it in percentage terms. This kind of normalizes it. And so that's why these two get out of sync when there are huge price changes, because you can see here the difference between the two moving averages goes from, say, 70 to the low 80s. So it's about $12, $13. And that's a big number. But when you put it in percentage terms, it turns into 15%, roughly. And then when you go up here in August, you may have another difference of, say, $11. But on a percentage basis, it's much less because the stock is trading at a much higher level. It's at 150 instead of the 70, 80 range. So let's see how these indicators work. But before that, note that there is a calculation example on the right for October 1st. And you can see the two moving average values. And the difference, which is MACD, is $9.96. And the PPO takes that 9.96, divides it by the longer moving average, and you get it in percentage terms. All right, now I'm going to move to the bottom of the chart and show you the two indicators and how they acted a bit differently. First, you can see that both of them shot up in April and May. And MACD actually went to a new high there in May when it moved above 12.5. The percentage price oscillator, however, peaked in the middle part of May and did not exceed its prior peak in late May. So percentage-wise, the change was not as much as it was on an absolute basis there. And then something really interesting happened in July, August, and September, because you can see MACD moved higher, but the percentage price oscillator moved lower. So while the absolute difference between the moving averages was moving higher, expanding, the percentage difference was not. And so as a momentum analyst, so to speak, you have to decide which is showing true momentum. And I would make the suggestion that the percentage change, the percentage price oscillator, is showing the true momentum here. Now you're going to get the same signals roughly, and if there's little change in the stock, if you're in a range between, say, 40 and 60, you're not going to see this difference between MACD and the PPO. It's only when you get these massive price changes that you're going to see these differences. So just keep that in mind when you're looking at MACD and the PPO. All right, that concludes this video edition of the Mailbag. Thanks very much for tuning in and have a great day.